Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, November 14th, 2019. Got a jam-packed schedule here for you today. Got a few things want to go over. Obviously, we'll start off like we always do, go through the daily market recap, take a look at some earnings reports. There was a big one out last night, and it wasn't very good. We'll talk about that. Upgrades and downgrades. Very interesting how one area has a couple of upgrades and a downgrade, yet the charts look a lot different. You'll want to take a look at that as well. I think it's pretty interesting. I'm going to get into the FAANG stocks, whether to buy or sell. I actually did some charts yesterday, sent it out to Earnings Beats members, and wanted to share those with you. And then we'll get into break it down. I'm going to take a look at some of the industrial area and how I break down the industrials. They've been leading on a relative basis. I wrote about that in my blog, my Trading Places blog earlier this week. Followed up a little bit with that this morning in my blog, and wanted to go over how I look at the market when I start to see an area of the market begin to outperform, how I look for trading candidates. I think you'll enjoy that. And then we'll end the show as we always do with three charts that I just think for whatever reason look very interesting, and they're three you should know heading into today's trading. All right, let's jump into the daily market recap. Yesterday was very interesting because there were a few stocks that really helped carry the Dow back from, it opened not so great. As you can see, it's been doing that quite a bit this week, where we gap down at the open and then we rally throughout the day. Today we're seeing futures down, not a lot, but they are down a little bit. So it may be another one of those cases, but you can see the Dow did rally to finish up 92 points yesterday. Getting close to 28,000. We're less than 1% away. Won't be long, maybe, before we can put another notch on the belt. S&P 500 did finish in positive territory as well, gaining 2 points after being down earlier in the session. The NASDAQ did rally off its open, but still finished down 4 points. And the small cap 600, same thing. We went down quite a bit. Actually tested the 20-day moving average, which we have not done on the other indices yet during the month of November, but we did do that yesterday on the small cap 600 before bouncing. 10-year Treasury yield is moving down today. It's down about 3 or 4 basis points, and there's some economic reports causing that. We'll talk about that in just a minute. Utilities leading to the upside. This hadn't been it's been a while, but we had not seen the defensive sectors leading the market since back when we were doing all that consolidating. I've got some interesting relative charts I'll show you in just a couple minutes. But utilities did bounce yesterday along with real estate. To the downside, financials not so good. We've seen the 10-year Treasury yield drop just like we're seeing today. So I wouldn't be surprised to see a little bit more profit taking in that financial area as we go throughout today. Broadcasting and entertainment got a big pop yesterday. Disney, with the Disney Plus service, indicated that they've already got over 10 million subscribers. And about 12 o'clock, right around noon yesterday, Disney popped. I'm going to show you some interesting charts, Disney and some of their competitors in that space. Transportation services pulled back, but kind of like the financials, it had been on such a run. I think you just got some profit taking place there. So not really too bad. Couple of other things. First, let's take a look at that 10-year Treasury yield, and you can see that we are moving lower. Just get an update here, make sure I got the latest. We are currently down almost 4 basis points, back to 1.83%. The 20-day moving average is 1.82. We really would like to try to hold on to that if at all possible. Economic reports out today. Initial jobless claims, 225,000. Market only expecting 215,000, and that 225 number was a 5-month high. So kind of spooked the market a little bit. You can see the reaction in the bond market is about what I would have expected. October PPI came in hotter than expected. Remember, yesterday we had the CPI come in a little bit hotter than expected. Today it was the PPI turn, rising 0.4% versus 0.3 expected. Core PPI rose 0.3%, which was slightly above the 0.2 rise that was expected. So a little bit of move up in inflation. And I had argued for rate cuts, not so much because of the economy, but because inflation was below target levels. Well, we're starting to see a little bit movement up in these October inflation readings. We'll see whether or not that continues going forward. But if we are continuing to beat those estimates, then I suspect that the Fed will probably be done in terms of its rate cutting campaign. But one report, I don't know that I'd be basing my long-term decision on one week of inflation reports. We'll see what happens in November. Okay, I mentioned the defensive groups leading the action. We hadn't seen that in a while. I just want to point out, this is the XLRE. This is the real estate sector divided by the S&P 500. And I want you to notice what happens from 2016. I'm going to pull up the just the S&P 500 for a second on this chart. And you can see really throughout 2016 all the way to January of 2018. See how we were in this huge run up? That is a bull market advance for sure. Since then, it's been all this consolidation. Now I want you to go back and look at this chart. So during the big move up in the S&P 500, you can see real estate lags. As soon as we got down to, well, as soon as we got to the top in the S&P, we got to a relative bottom in real estate. When the market consolidates, it consolidates for a reason. There's more fear. There's talk of recession. There's all kinds of things. Trade war. We've had all kinds of things over the past 2 years. When the market starts getting more nervous, money rotates back into defense. Look at what the XLRE did throughout this entire period. But back at the end of August, early September, when we began this run to the upside on the S&P 500, you can see that the move is back down on a relative basis on the XLRE. This is what I look at when we're breaking out to new highs and we're getting confirming signs of a bull market advance. Transport's helping to lead the way, small caps, the money rotating away from the treasury market into equities. All of those things, when they begin to line up, that confirms a bull market breakout, in my opinion. And when we see that, I expect the defensive groups to lag. I think that there's a lot of misconceptions out there when you're seeing during consolidation periods, when you see defensive groups leading, you think that that's horrible. It's not horrible during a consolidation period. It's horrible when you're breaking out the new highs and you're trying to sustain a bull market advance. You don't want defensive groups leading. That is not the case right now. We don't have that. Let's take a look at the XLU versus the S&P 500. Same deal. Look at us going down throughout the big move up in the S&P 500. During the consolidation period, we were up. Now that we're breaking out on the S&P, you can see this break coming back down. I suspect we're going to lose these relative support levels. Last one I'll show you is on the consumer staples. Same thing. Here's the move down. Consumer staples, when the market's strong, that's generally not a leader. During consolidation, it leads. Now the market's breaking out, and you can see the XLP on a relative basis moving back down. Just wanted to point out some of those things. Let's move on to, let's look at some of the leaders in the Dow. So yesterday we had a good day. The Dow was the leading index. You can see rising 30.33%, so roughly 1/3 of 1%. Here are your leaders: Disney, Nike, Walmart. Disney, I want to point out because Disney broke out. You can see this huge move up. Look at the volume coming in. And what's more impressive is look at the intraday. And do you see the difference here right around noon? That's when all the volume came in. That was the announcement where they had already had over 10 million subscribers. Stock goes right up from noon on. Interesting part here is when you look at Roku. Roku at noon, when Disney went soaring, went up with it. Didn't seem to be bothered. But check out Netflix. Netflix at noon took an immediate hit, came back up temporarily, and then all day, just about all the rest of the afternoon, selling off. Amazon. Now, Nike also announced yesterday that they are not going to be selling directly to Amazon. So I think Amazon got hit by a couple of different things. But you can see a big down day for Amazon, down 1.4%. I'm not a fan of Amazon right now. I'll talk about that when we get into the FAANG a little bit later. Okay, let's move on to earnings. Still, big earnings season. I mean, I know a lot of the bigger names are gone. It's starting to slow down some, but still get some big names from time to time. Last night, after the bell, Cisco came out, beat on the top line, beat on the bottom line, and is down 5%. Why? Well, the big reason is that they lowered their guidance going forward, and they lowered their revenues quite considerably. So when you start looking forward and lowering guidance, the market's not going to take too kindly to it. Check out Cisco relative to the telecom equipment group over the past 6 months, and especially just during this last quarter. Been going down. Look at the telecom group relative to the S&P, been going down. So you have one of the worst areas of the market. You have one of the worst stocks within the market. Should we be surprised that they came out and lowered guidance? I don't think so. The stock was down a couple percent. I would really watch this $46 level. It was down almost 5.5%. So you're probably looking at a couple bucks. I think it's still above 46 on a pre-market basis, but that's going to be the level you're going to want to watch. If it opens beneath all of these candle bodies right here in the 45s, I think we got some issues. If it can hold it, print a hollow candle, maybe we've got the worst behind us. Network Appliance, NTAP, missed on the top line, beat on the bottom line, down about 1% in pre-market. Still got some work to do here. Has been moving up because of the overall group. Computer hardware has been going up, so Network Appliance has been going up. On a relative basis, it is not a leader. And coming out with mixed numbers, I don't know, not a fan here. A couple that I wanted to point out that did very well, though, overnight. PRSP, this is Perspectus software stock. You can see that the software group's been okay. Look at the relative strength here. Not like a lot of the other software stocks that have been getting hit. This one actually moved up through the third quarter or into the fourth quarter. And you can see now why. They beat top line, $1.17 billion versus $1.11 billion. They beat bottom line, 54 cents versus 51. They guided higher, and they are up 6.5% in pre-market. But that's not the best one. Ping, Identity Holding. Stock is a recent IPO. You can see went up to about 21 back in September, fell all the way back into the 15s. Just been kind of going sideways, trying to find its direction. Well, it's found it this morning. The revenue is 61.8 million versus 55.0 million. And the bottom line, 13 cents versus 1 cent. The guided quarter four revenues higher. Stock is up 19% pre-market action. So Ping getting a nice pop to the upside. One that is probably not going to fare so well is Beazer. Beazer Homes in the home construction space. They missed on their top line. They did beat on the bottom line, but apparently traders not impressed. Stock down more than 8% this morning after testing a couple of times that 20-day moving average. You can see that this was actually a pretty good performer heading throughout about mid-October and then started to move lower. It is definitely going to lose some relative strength today. One company out that actually did very well yesterday, out with earnings today, it was one of the Dow leaders, Walmart. Walmart did miss on its revenues. Stock had gone up, broken out in anticipation of its earnings. It beat on its bottom line, $1.16 versus $1.09, and they did guide their fiscal year 20 adjusted earnings per share higher. So that is why they are getting a 2.3% pop this morning. So they are moving to the upside. It will be coming off of my strong earnings chart list because they did miss on the revenues, but still, stock looks pretty good. And when you look at a relative performance chart here, Walmart versus personal products, definitely one of the leaders there. Weibo, not sure if I'm pronouncing it correctly. The stock had some pretty good volume coming in here on this push to the upside. Relative strength was starting to build, but they did not come through. They missed on their revenues. They did beat bottom line, 77 versus 75 cents, but stock's down 11% pre-market. So that is going to put it down below the 50 and well below this prior low. So we got to really be careful there on WB. I was a little surprised based on the way it had been trading going into its earnings. NICE, nice chart. Taking a look relative to telecom equipment, it's been one of the strongest. Telecom equipment, obviously, as I said earlier, not doing very well. Stock is up about 1% in pre-market. They did beat top line, beat bottom line, and they guided their fiscal year 19 earnings per share slightly higher. So nice, having a nice reaction, not a great reaction, but a nice one. Last one for earnings today, CGC, cannabis stock, Canopy Growth Corp, been in a downtrend, just not a very good relative performer. They missed their revenues, they missed their earnings per share, and they are down 7.89%. Oh, I guess you could say that maybe the grass is greener elsewhere because the grass is pretty red here for CGC today. All right, move on. Upgrades, downgrades. This I wanted to show you. This is kind of interesting because if we're looking at the commercial vehicles area, Actually, let me pull up this chart. I'll come right back to this. So commercial vehicles and trucks, you can see, broke out above this prior high right here. So this has been one of the strongest areas of the market and really been leading this push to the upside. Now let's get back to those upgrades and downgrades, because I'm going to show you 4, and 3 of them are in this space right here. Allison Transmission Holdings was upgraded. Now I look at this stock, it's been going nowhere. I just showed you the groups breaking out, leading the market. Allison's been doing nothing. Look at the relative weakness. They're upgrading it. I don't see it. I see nothing here that I like. Technically, I would not agree with that upgrade. Instead, they also talked about PACCAR, P-C-A-R, which is in that same space. And this one I like much better because it is breaking out with nice volume, and it has been one of the leaders in this space throughout last year, not too far from a 52-week relative high. So I think this one looks much better. A downgrade today was in this space, Keys, which is a smaller company in the commercial vehicles and truck space. And I really like this one. Beautiful move after sideways consolidation, big breakout with earnings, nice volume, relative strength, just set a 52-week high, and this one's getting downgraded. Don't understand it. I think it's an opportunity, probably on the 20-day, but certainly if this stock were to get back down to about 31, 32, I think the 20-day plus that would be a great accumulation area. One other upgrade I just wanted to mention, Uber. Uber was upgraded. Why? Why would you upgrade Uber? I'm not seeing it. The stock just broke down recently, went from 34 to 25 on heavy volume, barely bounced. I see a bear flag here. I don't know. I think if it gets back up on the upgrade, if it were to pick up another $1.50, $2 to get up above 28 to test this overhead resistance and that 20-day moving average, I don't think it gets through. Just my opinion. Until I see it, I'm not going to believe it. All right, let's keep moving on. Next up, FAANG, buy or sell? All right, yesterday I did a daily market report, which I do every day for our members at Earnings Beats, and I thought I would just show you, this is kind of the layout. I do an executive summary, I do a market outlook, talking about the S&P and the fact we could pull back into this area, 20-day moving average, price support. Sector, industry focus, showing the transportation group pulling back, looking at a couple of key levels where that 20-day has been holding. I go through my strong earnings chart list, and I usually run a scan against it, and then I post results of the scan along with a few of the charts that look pretty interesting. So you can see a couple of these charts here. HRC, which had gapped up, broken out, put all the way back, trying to find support down near that 102 level. SSD getting close. This was another one that had a huge beat with its earnings. And then go through active alerts, and then some the movers. And so what I wanted to do yesterday and what I want to show you are the FAANG stocks and the way I evaluated them. So first we'll start with Facebook. Facebook, you can see coming down, testing its 20-day moving average, so far holding, seems to be in an uptrend. PPO has gone positive, looking pretty good. If there's one thing that bothers me is that Facebook, you know, it's going up a little bit because the internet group's been going up. It's not really showing leadership. So I put this little line in here. I'd like to see it begin to lead the internet group. If it leads the internet group, then I'd feel better about it. It's okay. Volume trend's pretty strong. Like I said, trending higher, holding the 20-day. So I rated this a buy with a fairly tight stop, because if you don't have a leader and you start to break down, I don't want to be part of it. But it is starting to show some good signs on its absolute chart. So I rated Facebook as a buy with a fairly tight stop. Amazon, after setting its high back in July, you can see has been moving down. It's been moving down while the S&P 500 has been flying to the upside. Apple's been flying. Some of the other, FAANG stocks have been moving, like I showed you, just, Facebook starting to move a little. Amazon's done almost nothing. And the stock gapped down on its earnings, did rebound off of that, but it started to roll back over again. This was intraday yesterday when it was down 0.59%. Remember earlier I showed you it was down 1.4% yesterday. This was as of 10:47 in the morning, so pretty early in the action. But look at the relative strength versus the broadline retailers, and look at broadline retailers relative to the S&P. How can you like Amazon? It's underperforming its peers, and its peers are underperforming the S&P. Amazon's a great company, but I wouldn't touch it right now. So my call on it is a sell. Apple continues to run higher. I mean, the stock just will not stop. It has been in a parabolic move to the upside. That will end at some point, probably similar to what we saw back in May when we pulled back. The only difference now is that back in May, Apple was still reacting to trade war fears. Now it has not. Didn't really react much in August, came right back up. So I think that it's a little different landscape, but Apple's very, very overbought. Great relative performer, though. This is how you outperform the S&P 500, by getting in with leaders. My call is that it's a strong buy, but on weakness. We need to see a little pullback. It's hard to chase a stock like this. Netflix. Netflix double top, broke down, went back up, tested this overhead area of resistance, and has been trending lower. I did not understand the earnings pop when they came out. They missed. It was not a pretty report. Stock went up. I think maybe it just wasn't as bad as maybe some thought it was going to be, and that's why we had an initial push to the upside. But we quickly saw selling again after the gap up, and you can see that was on very heavy volume. Now we've been rebounding. I would watch this 20-day moving average. I do not trust Netflix at all, and I think Netflix, if I pull up Netflix actually rolled over yesterday and went back down below that 20-day moving average. So I am not a fan at all right there. Looking back here at the relative chart, you've got one of the worst performers versus the internet. This is much worse than Facebook. So my call is a sell on Netflix. I'm just not seeing it yet. Google, this one I actually like. They did not beat their earnings per share estimate in their last quarter, so they're not on my strong earnings chart list, but the stock has been trending higher. It did break out to a new high, so it's going up with the market. You can see the PPO there has been strong, staying above the center line, which shows positive momentum. And a relative to the internet, this one actually is rising. So as money rotates into internet stocks, Google is getting it. Netflix is not, and Facebook's just kind of going along for the ride. So I like Google. I think Google is a strong buy. So Apple and Google are the two I like. Netflix and Amazon are the two I don't. And Facebook is just a little bit more neutral, maybe a slightly bullish feel to it, but I really want to see relative strength there. So that is the FAANG stock buy or sell that I felt as of yesterday. I do end my report here, as you can see, with earnings reports and economic reports. Okay, let's keep moving on. Break it down. I've been talking about industrials quite a bit. First thing I did is I just looked at the relative strength of all of the industry groups, and I set this period to 3 months to see what areas of the market have been leading. So I set up all of these charts, by the way, in a separate chart list at StockCharts. So this isn't something that's determined or something you can go look at on StockCharts. It's something I had to set up, but I created a folder and I put every industry group in that, relative to the S&P, and then had a 3-year chart and to come up with what I wanted to be able to see that rotation, and I wanted to be able to pull it up pretty quickly, which is exactly what I did here. So this is a, let's see here. If you go down the list here, you'll see the top 3 industry groups within the industrials. We've got the industrial suppliers, commercial vehicles and trucks, which we talked about a little bit ago, and then transportation services. Those are the 3 areas I want to focus on. So and the reason being is that over the last 3 months, look at these groups have been up very strongly. And if I pull up the charts, here's one. You can see on a relative basis, it's gone positive now versus the S&P 500 on its relative PPO. It's now above its 20 and 50-day moving average on a relative basis, and the 20s crossing the 50. So that's certainly a very strong one. I'll show you one more here, but this is the commercial vehicles and trucks. Same thing. We were down below. We've crossed that center line. We're starting to show relative strength. And with that, if we continue to show more strength, we'll have to watch, see. But I would be expecting that 20 to cross over the 50 there as well. Once I get that configuration, that's when I'm most bullish. Price above the 20, which is above the 50, with a positive relative PPO. That's when I want to start looking at stocks within those groups. So might be a little early here, but hey, you know what? This, in my opinion, this is the early stages of a big run-up in the market. Anyway, going to wrap things up now. I want to thank all of you for joining me today. Be sure to check in here, Trading Places Live, every Tuesday and Thursday. If you want to catch me on Trading Places Live Mondays and Wednesdays, you can do so over at earningsbeats.com. Everybody have a great day, and hope to see you back here next week. Happy trading, everybody.